Look at what's happening in the world. Just since you've been alive, dear listener, everything's gotten slightly better. Like, depending how old you are, you go from like VHS tapes to VCDs to Laserdisc to DVDs to Blu-ray to, internet rips to Netflix to on it goes. Everything just incrementally gets better. And you have some parts of radical innovation there and some incremental innovation. Why not in money and finance? Why do we have to have all these institutions? Why do we have to have T+2? Why can't we trade directly peer-to-peer like we do on the internet? Why can't we have internet-native money? Why can't we have an open, composable app store that's permissionless on the internet? All those things just fundamentally make sense.
Welcome back to another episode of the Ben and Bergs podcast. I'm Ben, your favorite high school dropout and founder of Collective Shift. Alongside me is Bergs, your favorite MBA and COO of Collective Shift. Join us as we bring you world-class crypto research and strategies to help you dominate this crypto bull market, as well as behind-the-scenes view of us scaling a fully remote subscription research business here in Australia. And if you like the podcast, we'd love for you to leave a little subscribe if you're on YouTube, or follow us on your favorite podcasting app. There are nearly 700 awesome people following this podcast now, Bergs. There's nearly, across YouTube and podcast, we're nearly up to about 700 unique episode listeners across podcast and YouTube, which is unbelievable. Super exciting. And I talk to a lot of you that come on to strategy calls and become members. I was speaking to a listener recently, Bergs, who's holding a stack of 25 million in crypto. He rotated from BTC into Solana, WIF, and Bonk in October, and he's now going to rip that to 9 figures. This cycle is his goal. Unbelievable.
What conviction, what a lad. Yeah. Puts his stack in right at the bottom and then just pumps to glory. I've got to meet this guy. Sounds amazing.
Yeah, no, he's a weapon. That's what it takes. If you've got the kahunas, if you've got the backing and the conviction to bet at the lows, then that's where you're going to make the returns. And it's what we've been talking about for a couple of years now, Bergs, on the pod, and even longer, like in Collective Shift. Like, the best opportunities come in these corrections. And in bull markets, it can be hard because it's down 30, 40, 50% from the local highs. But those are the times to invest. Those are the times to get in. And we did that. We shared with our members, and we shared it on the podcast, actually, that we were buying Ethereum. It was about a month or two ago. And then also more recently, about 3 weeks ago, we made some altcoin investments, which we'll share about. But the reason the market's on the move, Bergs, is because the Ethereum ETF has gone from about an 8% probability approval rate to 75% approval rate. And that happened overnight earlier this week, which was pretty wild.
Wasn't it just insane to wake up to? It's like all of a sudden, all crypto's through the roof. Bitcoin's up, Ethereum's up. And going back to what Nathan said on that episode, if you're looking at a 4-year cycle, for 2 years, 2.5 years, you're getting really bad returns or negative returns. So that 1.5 to 2 years where things are really good, you need huge outsized returns to make up for it. And that's what we're seeing now.
100%. And, people were pricing in the fact that it wasn't going to be approved. It was actually, as of, about 2 weeks ago, it was a 7% likelihood that it was going to be approved on Polymarket, which is pretty wild. Now, if the SEC does deny the application, which is still a probability, that you could argue that ETH may then end up becoming or spoken about as a security, and there'll be some pretty negative headlines. And I think that would probably put some more downward pressure on ETH in the short term. But more recently, we've seen that there's been some political pressure on the SEC to actually approve this ETF. And now, as of, I think it was Tuesday night, Australian time, overnight, that ripped to 75% approval ratings from Bloomberg. There's now, there's been the ETF providers reinstate some of their applications to the SEC. There's been talks of there's actual ETF tickers on some of the brokerage sites. Like, there's kind of like, the same stuff that was happening, Bergs, when Bitcoin was getting approved, or the days leading up to it. It's playing out eerily similar.
Let's just talk about the real news, mate. The power behind the power. Your boy, Donald Trump, starting the crypto wars. He's now accepting crypto. I'm reading from his website.
Okay.
Reading this from his website, donaldjtrump.com. Starting today, people wanting to make federally permissible donations to the Trump campaign with crypto can do so at his website /crypto. Amazing. As our president, Donald J. Trump has reduced regulations and championed innovation in financial technology while Democrats like Biden and his official surrogate, Elizabeth Warren, continue to believe only government has the answers to how our nation leads the world. And he goes on to say, Biden surrogate Elizabeth Warren said in an attack on cryptocurrency, she was building an anti-crypto army to restrict Americans' right to make their own financial choices. MAGA supporters, now with a new cryptocurrency option, will build a crypto army, moving the campaign to victory on November 5th. And he's got his website set up. You can start donating. You will love this website, Ben. It's just so optimized for donations. You can his donations $20.24, 45, 47, 2024. And it's got all the tickers. He's got like Bitcoin, ETH, Sol, USDC, Doge, Shiba. It's like, bro, it is amazing. So for him to come out and say that, and I like looking at these every now and then on OpenSea. You've got Trump digital trading cards, and I was like, okay, let's just have a look at the price. Let's see how things are going.
Yeah, it's wild, Bergs. Trump is really now taking this line of getting the crypto folks on board because of how Biden has been so negative towards it. But in a huge turn of events in sort of the last 24 hours, Biden is now like completely changing his viewpoint. And in the, I think it was as of this morning, time of recording, the FIT 21 passes the House 279 to 136. So basically, there was a crypto bill that was going through, and Biden has basically, not allowed it to go through. I think it was called I'm not entirely sure what the regulatory framework was, but it was basically pushing digital assets into a place where there'd be more oversight. It was quite negative. It was quite a negative bill. And basically, it didn't get passed this morning. And Biden is now like changing his tune to be more crypto friendly, which is pretty funny. So, it's pretty wild times, man. This is hugely bullish for crypto.
It's interesting when an election is on the line and it's something like crypto that could give a candidate a point of difference to win an election. And if one candidate is doing it, you can't be staunchly anti-crypto if the majority of people are crypto friendly. Like, what was that stat? Like the majority of people in America own some crypto.
Yeah, or have heard of it, or you know what I mean? Like they're aware of it and they know the benefits. And that legislation, sorry, just to be clear, was going to put most forms of cryptocurrency, including Bitcoin, under the regulatory purview of the Commodities Futures Trading Commission. And now, looking like it's going to be more classified as commodities rather than securities that would have fell under the authority of the SEC. So, that was executed in the crackdown on the industry under Biden. So basically, now up until this point, there was a real push to push all of these cryptocurrencies under the SEC and basically call them securities, but commodities are under a different regulatory purview. And now it's looking like they're going to be pushed towards the Commodities and Futures Trading Commission, which is far better for crypto, because if they were regulated securities, we'd just go through this whole sort of like very negative, oversight and be a huge pain in the ass, really. So, massive news, mate. And as you said, if Trump gets elected, basically we can say see you later to, Gary Gensler and our friends over there at the SEC, and finally maybe get a bit more clarity towards crypto, which would be massive for everyone building and investing.
Yeah, and just a couple of days ago as well, a couple of people from the SEC were let go, like a couple of regulatory authority people. Don't have it in front of me, but that happened. 2 or 3 people in key positions were let go. And then all of a sudden, there's this big shift, which is really just interesting to see play out as someone that's an investor. You're like, whoa, this tide has shifted a lot, where we're going from, hey, this is never happening, or it'll take a while to happen, to actually this has a really good chance of happening in 2 days from now.
Yeah, 100%, Bergs. And that political pressure, like you said, what I've been reading is it's more about like what both Trump and Biden have realized is they're not going to necessarily lose any votes by being pro-crypto, but they may lose votes if they are very anti-crypto, particularly from younger people. So to get both the current president and the former president now being pro-crypto is pretty exciting. And I think this is one of the biggest catalysts for crypto heading into this, really bullish back end of 2024 and into 2025, where the elections are sort of kicking off, all playing around this 4-year cycle. And it's so funny, Bergs. 3 weeks ago, the bottom of the sentiment, greed was high, greed was down, fear was high, and all the TA analysts are out there, Bergs. The 4-year cycle's over. You all got too ahead of yourselves. They're saying it's all over. I told you, it's all just, we're going back down to retest the $40,000 levels. What a load of bullshit. Time and time again, people jump on the bandwagon of, when things get negative, everyone jumps on. And that's why the counter trade is so good. That's why counter trading sentiment, when fundamentals are strong, continues to be the best play, and where we've made a couple of really top investments, I think, Bergs, in the last couple of months.
Exactly right, man. And gee, that clip of that guy on Joe Rogan popping up where he's like, Bitcoin has no intrinsic value. It's going to zero. It's at 16,000. It's going down. It's got another 17 to go down. It's like, mate, how long have you spent studying this thing? 0 hours. Spend like 40 hours studying it, and then think about your opinion then. I don't know anyone that studied Bitcoin for a significant amount of time and gone, this is trash. And then
it's just, yeah.
You start to study Ethereum. And then the argument is like, oh, Ethereum doesn't scale. It's got, too many L2s. It's got this, it's got that. And it's like, all of that is Ethereum. L2s are Ethereum. You need to think of it in that way.
There's just so many commentators in this space, and I get fired up because I've been doing this for 8 years now, full-time investing, and I've seen it time and time again that these very transient, transactional people, specifically influencers, come and go as they please. When crypto's pumping, they're so-called experts. When it's down, they're against it, and they go back doing whatever the hell they were doing before. But like, so many people just have no idea, and I'm not claiming to know everything. I'm far from it, but fundamentally, looking at charts and pretending to know what you're doing is not going to find good quality investments. It's not going to help you find bottoms. It's going to help you directionally where the market's going, but you have to overlay fundamentals. You have to overlay sentiment. You have to overlay on-chain. You can't just be looking at one metric or one way of looking at a market to think that that's going to tell you what's going on. Like the RSI and the 30-day moving average is not going to give you an indication of where you can make money. You know what I mean? Like it's just so oversimplified. It frustrates me because I see so many people getting caught in the trap of going and listening to these people, following them blindly. And that's why so many people lose money.
The biggest videos I'm seeing now, predominantly females, from like FinTwit, Insta, and TikTok, where they go on and they're like, they're heavily made up. So they've got, their nails done, their hair done, big makeup, usually sitting on a bed going, hey, I'm a day trader. All you need to do is start with $100. And if you make 2% per day, after a certain amount of days, you've got $1 million, like 200 something days. And I was like, holy shit. Okay. Do you know how difficult it is to put your entire stack in, make 2% time and time again? No, I don't believe anyone on the planet can actually do that, first of all. But this is like, people get sucked into that simplicity because it's easy and you can start straight away. Like researching projects is difficult, thinking about the space is difficult, understanding money is difficult. And if we pair all this back, you're like, look at what's happening in the world. Just since you've been alive, dear listener, everything's gotten slightly better. Like, depending how old you are, you go from like VHS tapes to VCDs to Laserdiscs to DVDs to Blu-ray to internet rips to Netflix to on and on it goes. Everything just incrementally gets better. And you have some parts of radical innovation there and some incremental innovation. Why not in money and finance? Why do we have to have all these institutions? Why do we have to have T+2? Why can't we trade directly peer-to-peer like we do on the internet? Why can't we have internet-native money? Why can't we have an open, composable app store that's permissionless on the internet?
Yeah.
All those things just fundamentally make sense.
Yeah. You're so right, Bergs. It's like people forget that markets are a two-sided competitive game. Like there is winners and losers. We're not living in some AI like game where like, your strategy is better than others if you've walked in and been doing it for a week or listening to these people online. Like you are playing against quant funds. You're playing against hedge funds. You're playing against guys that have AI algorithms that have been trading for, years and years and years, playing with billions and billions and billions of dollars, and you think you can just roll up and play this like 2% a day stuff. It's like, yes, you may win in the short term, but like, it's like, would you go out in a soccer game and just go up and be able to walk up against Argentina and reckon you're going to win. It's like, it's just, that doesn't work like that.
Yeah.
You have to put on your edge.
That's exactly it. Like, you can just go in to the NBA, identify as a pro NBA basketball player, and you're going to get smashed.
Yeah.
Like, that's the reality of what's happening. Just because you have access to the tooling doesn't mean you're going to be great. And just having access to a basketball court doesn't mean you're going to be a pro basketball. It takes a lot of time, practice, luck, all of the above. So that's why we know that. And that's why we don't play in that space. We play in a space where we can win.
Yeah, exactly. And that space for us where we have our edge, which has helped me make the money that I have, that our team has, and the reasons why we do what we do. The reality is we don't need Collective Shift. We could just be investing full-time and doing it on our own. The reason we built Collective Shift was that we could leverage the research we were already doing from the money we were making, helping others win, which we like helping others. And if they win, any money we make, we can buy more crypto with. It's like, it's just such a win-win. And that's why we make really clear that we don't do advertising. We don't do affiliates. We don't do commissions. We don't do all this bullshit, which every other influencer in this space does, because they are incentivized to get your eyeballs and your clicks and you getting on there. And no wonder they want you to learn how to do trading, because you're going to get on Bybit, jam all your money in there, lose it all, and they're going to earn 20% of it. Like, that's how they make money. And then that's why we're completely opposite to that.
Yeah, that's the thing. Like, a lot of traders will have a link in every dollar you trade, they'll get a clip of it.
Yeah. It's how
incentive is to keep you trading.
It's how sports betting works. It's like, if you go on like any trading, like tipping websites for sports betting or horses, they're all shilling their like sports bet link because it's a revenue share.
Yeah. Now, I've seen something, Ben, about with the ETH ETF, and perhaps you got a bit more knowledge than me, but a lot of money is actually staked on Ethereum. And if it's staked, it's unavailable for an ETH ETF to scoop up, as well as issuance is negative. So more ETH is getting burnt than is being created. That creates some really great scenarios, which is different to Bitcoin, which is disinflationary. So it's inflating at a lower rate. So the currency amount is going up that's available in supply, whereas Ethereum's going down and it's locked. That's an interesting dynamic.
It's pretty wild. Like 30% is going to remain staked off market, meaning the burning of the tokens makes supply deeply negative as activity rises. And, there's been this thing on Twitter recently around like the banana zone, like when things just go, completely upwards. And Raoul Pal recently called this potential ETF approval being the banana zone squared. Because basically, like, there's negative issuance on Ethereum right now and has been for a little bit. Again, why we were still bullish on Ethereum. Like the daily, since the merge, it's in 2022, ETH has been continuing to be deflationary. The current annual inflation rate is 0.21%. Once and if the ETF gets approved and those that 30% of ETH is still staked off chain, well, yeah, like you said, there's 30% of the supply that isn't accessible to buy. Now, you've not only have you got the ETH ETF, but you've also got more demand side with like the likes of Eigenlayer with the restaking.
Yeah.
You've got Ethereum continues to be the most popular layer one blockchain. So, even with the rise of Solana and other like good layer ones, combining the market share of Ethereum and its network of layer twos, we can still see the clear theme as users and developers continue to build in the Ethereum ecosystem or on Ethereum compatible blockchain. So 70% of 70% of TVL, 71% of contract code is initially deployed on Ethereum, and 55% of stable coins is on Ethereum, which is wild.
So what we're talking about here is the demand side, right? So think about this. You've got 30% is staked that you just can't get. Then you've got people like Ben and I that are long-term holders, and we're not selling and we're not staking. That money is just not, that's staying there, right? Then you've got people that actually build, and all of these different apps, contracts are competing, right? They're competing for this compute, and they're competing, and they have to have ETH, sell ETH in order to pay for gas fees to utilize that compute. All of this is happening, plus, all the different traders, ETFs are another one. Everyone is going to compete, and demand is going to outstrip supply. So this is really, really exciting because it's slightly different to where Bitcoin is at, because it's like, yes, you can build on Bitcoin, but Ethereum is meant to be used. It's not meant to be kind of just held, right? It's meant to be have awesome apps on it, awesome things you can do on it, lots of trading, lots of decentralized exchanges, on and on it goes. I'm really keen to see how this plays out over the next 6 months when the ETF gets approved.
One of the most fascinating things as well, Bergs, is because of the staking, this is how Ethereum is fundamentally different from Bitcoin, is because there's underlying revenue and profit metrics you can gather from it. So in, I think this was in 2023, the Ethereum network generated $825 million approximate dollars in revenue, and about $370 million of that was profit, which is wild. So that's all being generated with the staking going back into Ethereum, which is why you get those negative burns. And in 2023, Van Eck, head of digital assets research, explained that ETH's staking rate creates a major new competitor to the US Treasury bills and could see its revenues rising from an annual rate of $2.6 billion to $51 billion in 2030, which is wild.
Okay, so a couple episodes ago, we talked about the barbell strategy, and in my head, it was always, equities like shares, property, cash and bonds on one side, crypto on the other. And then Nathan's like, no, Bitcoin is so significantly de-risked, it belongs on the property side. And I was like, oh shit, like I'm not allocated properly then. I don't have enough risky crypto. But then if you stake Ethereum, and it's easier to do, it's decentralized, it may be more trusted, in inverted commas for people on the podcast, if you don't trust your government on what they're actually doing, because it is decentralized, you can audit the code, on it goes. So in the future, do you think, even could you imagine seeing like people wanting the most secure things on the planet, apart from cash, the next step up is bonds. Instead of having bonds and buying government bonds, you buy Ethereum and you stake it and you get yield from that. Like, how crazy is that? That is a safe thing.
That's wild. But that's where the future's going. And then continue from that scaling efforts. Like, we're going to continue to see, the increasing L2 adoption, more scaling's going on. Ethereum's got some more upgrades coming up as well. So that the new confirmed date for the Petra upgrade could come later this year. Most expecting that to go live in Q4 2024 or Q1 2025. So yeah, it's an epic time. I mean, the reality is we still have a percentage likelihood that the ETH ETF could be rejected. If that plays out, I think we see prices probably coming back down to the sort of low $3,000 level where we were last week. But if it's approved, then I think the demand side impacts on restaking, on the ETF as a whole, could just see Ethereum continue to grow. And yeah, Bergs, that post we made on Ethereum, which was I think a couple of months ago, we made a pretty big investment into ETH at around 3,100 in March. Yep, that's up about 22% since then. So sitting pretty nice on that. And then also, and again, the reasons for that was that the fundamentals were all looking strong. We're looking at all of these things that Ethereum's doing, but that what sentiment's like completely dead and everyone's just throwing in the towel on ETH.
Oh,
perfect counter trade.
Everyone was hating it, and the more they hated it, the more I bought.
Yeah.
Like, really. Okay, so let's sum up here. Let's go through how we prepared, how we're thinking about it if an ETF is approved, and then we'll do the scenario where it's not. So let's say it's approved. So what we've done so far is we've bought more Ethereum, we've been stacking, we've bought altcoins, and if it's approved, it is likely to see a run like we saw with the Bitcoin ETF. And from there, with the tokens that we hold, we've got certain positions and we'll be selling at a certain period in time, right? Mm-hmm. So we've done all the pre-work. Yeah. Anything you want to add to that before we go into the...
Yeah, the other side. Yeah, so the other side of that. So we stacked Ethereum initially because I wanted to build up our Ethereum stack back in March. And then more recently, altcoins were down 30, 40, 50%, right? That was another good counter trade that I felt that, again, fundamentally things were no different than where we were a month ago or 2 months ago in March, but sentiment had dried up. I'd saw social media really die off. I'd seen on chain that a lot of the weak hands that had bought in the last month or two had completely evaporated. So all the people, and by evaporate, I mean sold. So a lot of the people that came in at the local top sold at the local bottom. The greed the fear got it at its worst, and then we made some of those investment plays, Bergs, which again we shared to members. I won't share all of these, but one that I am really liking at the moment that we invested in is Prime. Prime is a new project that's sort of overlaying AI and gaming. If you listen to us for a little while, we're bullish on gaming. So we made a play on Prime at those lows, and he's up, I think, what do we say, Bergs, around 57%, I think, since we bought in 3 weeks ago. And the other one, DMT, which we've spoken about for a little while now, DMT I invested in, that was on May the 3rd. Oh, no, it wasn't. That was a little bit before that. I think that was in March as well. That's up 248% since buying in. I think it nearly hit all-time highs today. So that was a layer 3. That's building Web3 Twitch. The point I'm trying to make is that if you can overlay good quality fundamentals and it has the right narrative and sentiment, and you can get in at a good price when people aren't thinking that it's going to be super bullish. Because when we bought these things, people are like, the sentiment's out, throw in the towel, it's over. But if you can predict future narratives and future sentiment along with good fundamentals, that's where you get winners. And I think that's where we're really, Bergs, we've been so successful the last few years of making some really good plays when you can overlay those two.
Absolutely. And when you can see what's happening and fundamentals haven't changed. So let's do the other scenario now where, let's say, an Ethereum ETF is rejected, right? Fundamentally, zero has changed for ETH. People are still building, people are still using it, they're buying, they're using DEXs, they're staking it, nothing has changed. For me, that is a gift. Like, if that happens, I hope the price tanks and I'll be backing up the truck, because nothing has changed for me. And I really think an ETF is a when, not an if. And it's not even the massive thing. Like, it is a catalyst and it is a thing, but everything that's happening under the hood of ETH is incredible. Like, you just can't keep across it because it is so much.
It was the same conversation, Bergs, around the Bitcoin ETF. It's just a vehicle to get more capital in. It doesn't. The ETF isn't changing Ethereum. You know what I mean? It's just changing the supply-demand economics, which is super bullish.
Yeah, it's a demand driver. That's all it is.
100%. But like you said, if it gets rejected, will we cool off? We wait to the election. Something happens. Maybe Trump gets in, and then we go again. It's just time.
This is the kind of way we're talking now. When you've had multiple cycles, you look at it with a cooler head and just see it for what it is. Not, crap, I put my money in at, like, let's say 3,700, whatever it is today, and oh no, it's going down to 3,000. I need to panic sell. It's like, you don't. Just zoom out and think long term. Like, in 2 years, 3 years, 5, 10 years, what will happen along that way? What will the price be? Has anything fundamentally changed? Calm down. It's okay.
Agree. Guys, we're going to wrap it up there. Thank you so much for listening. As always, if you do want to know our investments, when we're buying, when we're selling, if you want to join the party, if you want to really try and crush at this bull market, we'd love to help you out. You can book in a free one-on-one strategy session with us, and we can try and see where you're at, see where your goals are, see what your challenges are, and just genuinely help. And we've helped so many Ben & Bergs listeners. It's honestly epic. And join our community, join our live sessions. We share as much as we can on the podcast. The reality is we have to keep the secret herbs and spices to our members, and we'd love to have you join us. So, if you'd like to, just jump in the link below. You can book in a call, completely no obligation. If it's not for you, we'll try and put you in the right direction.
And Ben, how good does it feel, like, when you give me a call, you're just like, oh, I just had another Ben & Bergs listener, like, on a strategy call. They've signed up as a member, and it's just, I can't even describe the feeling. It's just so amazing that people are out there, they're listening to us, they're resonating with it. They've got a bit of crypto, want to get started. They come across to the business, and we just set them on the right path. Like, that is one of the best feelings. It's one of the most satisfying things I have in my life.
100%. Great. I still remember when we first started, mate, when there was, your mum, my mum, and the next door neighbor listening to the podcast. And
my
now
mum's never listened, mate. She still doesn't listen. She's like, no, I have to listen to you in person. That's bad enough. You're trash. Get out of my life. No, she's great, but she just doesn't listen to the podcast.
But no, seriously, coming from where we started, nearly 2 years ago now. It's actually our 2-year anniversary of Ben & Bergs in June, I think, next month.
Hey.
So to come from where we were to have like 700 of you legends listening in, it's absolutely awesome. Hopefully you've learned a thing or two. I assume you have if you're still listening. If you weren't, you're probably heading off. But yeah, we're going to keep coming to you each and every week without the bullshit, giving you what you need to know to try and crush this bull market. So thanks so much, guys. We'll see you on the next episode.
Thanks, champions.